Hi, and welcome to another daily recap. So today I'm going to recap day 115 and October 15, 2022. So to summarize, today I didn't get any trades on GU, but on EU I got one break-even trade. So it was almost a winner, but price just reversed back and then made a break-even trade. So yeah, let's jump into the whiteboard and see what happened on both EU as well as GU. So this is euro dollar. So let's start with euro dollar. In EU, in the daily chart, the swing structure is bullish. The channel is bearish, and the price mitigated the daily demand. And it has a deeper mitigation into the daily demand, which means the price can in time take out, invalidate this demand and take out the sell side liquidity below. So that is what I was expecting yesterday. Actually, my bias was bearish, and I expected the price to be bearish and take out the sell side liquidity. So price has now made a deeper mitigation into the daily demand. Thus, there is a high chance that the price may take out the sell side liquidity below this demand. Ideally, and wait for the price to take some buy side liquidity in the lower time frames before pushing down to take the daily sell side liquidity. It's as simple as that. So to take the sell side liquidity, price must grab some buy side liquidity to fuel itself down to take the sell side. Otherwise, if the price has enough momentum within itself, then it can push down and take the sell side liquidity on its own without taking any buy side. It sounds a bit complex, but once you understand the concept of liquidity, it's very easy. So jumping into the 4-hour chart, the 4-hour same, the swing structure is bullish, the swing structure is bearish, the internal is bearish, and we are just following this bearish order flow and targeting the daily sell side. And yeah, price actually mitigated this 4-hour demand, and there is no significant supply to the left within this internal range. So price can and so that's all this can be considered as a lower extent liquidity, and the price can rally through them at ease and tap into the extreme daily supply. Can happen, but for now, what I can expect is price can just take some buy side liquidity here, and then it can push down, take out the sell side liquidity, and then it can push up to make the internal pullback or mitigate into the daily supply. So jumping into the H1 chart, we can say that the H1 the swing structure is bearish and another is also bearish, and there is one straight push down. This means that there is no significant supply on the left from which the price can react from. But I can say that the price has chopped bullish. It's visible if you zoom in. The price has actually chopped bullish, and I can say this could be the POI from which the price can react and then push further down. So if that happens, then I'll be happy to take shots from here. Otherwise, I'll be taking, you know, it's a, I'll be hitting the price, take this sell side liquidity, and then chop bullish, and then I'll be taking, longs from here. So it's as simple as that. So price made a bearish repose after which I can expect an internal pullback. This pullback can be expected when the price takes out the daily sell side liquidity. Thus for longs, I need to see the price taking out the daily target and then chop bullish. As I mentioned it earlier. For shorts, I need to see the price mitigating the H1 POI here, and with some low time frame confirmations, I can take shots targeting the daily target. Why I'm not looking for chalk bearish is that price is already chalk bearish and the fractal eye is right here, and the fractal eye and the internal eye is the same and it's right here. So which means that the fractal order flow is already bearish. So all I must look for is a pullback inducement or a leg inducement somewhere here, and then I can look for shorts targeting the daily sell side liquidity. And one more thing is that I must keep this risk factor in my mind. I must keep in mind that the price is still in the daily or dash 4-hour demand, and the price can anytime shift its gears to bullish and then make the next higher. So what does this mean? The price has mitigated the 4-hour demand. Now, what the price can do is what the price can do is it can respect this 4-hour demand, push the price up, and take out the strong internal line, and then price can continue the bullish order. If that happens, my shorts idea would fail and my stop loss would be taken off. It's as simple as that. So this is first session update where the price has mitigated into the uh, H1 supply without taking the daily top. So now I can look into the lower time frames and see for the lower time frame confirmations to go for yours. But there is one small issue here with me, which is that the price did not, close below this internal low, and it just liquidated it. So this could be a sign that the demand has stepped into the market, taking out some sell side liquidity here, and the price can push through this one because there is no liquidity all the way up here, all the way, and the only liquidity available is right above the strong high, and the price can easily take the buy sell liquidity here, and then it can start to push down. So currently, I was not interested in shorts because of this, weak close. If there was a body close, then I would be interested in shorts. But currently, I was not interested, so I didn't take any shorts at this. Yeah, actually, what happened is that price actually made a bullish I was right there, and in the 4 hour, you can see that this is actually chalk bullish in the 4 hour chart also, which means this trade area is now got invalidated, and the price has uh, made a bullish I was in H1 and a chalk bullish in 4 hour time frame. So which means that it's time to play the PSC shots. And let me put down the PSC conditions for you. So the price is still in the non-OT. It's high time frame is supporting the medium time frame idea because price has indicated the 4 hour demand and it's stopped bullish, which means there could be an internal pullback in the high time frame, which means that could be this swing high can be taken out because this swing high is the internal high of the 4 hour chart. So high time frame is in support, and the medium time frame has 4 rotated criteria met. Yes, it has 5 rotated criteria met. How? Because it has swept liquidity and it has displacement. It has made a shift in the order flow, made an bullish eyeballs, and it is unmitigated, and it is formed during the kill zone. The only drawback is that it did not sweep liquidity, and one more thing is that it has equal lows, perfect equal lows for the price to come down and take for the price to get magnetized. So these two risk factors are in place. So, so what are the other confluences? So it has swept the Asian low and it does not have any opposing supply zones because all the supply zones are mitigated. It forms a low resistance spot for the price to rally through, and it also has time-based liquidity to target. That is New York high and the previous day high as well as the London high, and it has swept the previous day's low and now it's pushing up, and it's also having a positive KSMT, the XY, and one more thing is that this low is formed and it came off the London and there is no red folder news, which means the London can form the low of the day. So once the low of the day is formed, this view, this low becomes strong and this POI becomes valid, and price will respect this POI to make a deeper, a bullish reaction from this POI. So a lot of confluences are adding up, so that's why it's a high probability trade for me, but it's kind of medium probability trade when you see the technique. So, so what is the entry method? The entry method is LC1. So I'll also be welcoming LC2A if it happens, but let's see whether it happens or not. So yeah, price came down, the led and then tapped into the uh, demand zone, but I waited a bit for this led to be taken, but price actually respected it and pushed it up. So I didn't place a trade. I didn't place a stop order immediately. So I placed a buy limit order here, and I was waiting for the price to tag me in and the odds playing in my favor. And fortunately, price came down and tagged me in for a while. I was afraid that the price would take out my stops and it would target this equal lows. But price did not come down, target the equal lows. Rather, it just respected, tagged me in, and then started to go up. So at this point, as you know, this white line you can see at this point, um, I put my stop to just about a break even, and then I just took my eyes off the screen. And when I came later and checked my trade, and it was actually a break even trade, and my stocks were taken at break even. So what happened exactly is what I thought was after taking the London high price, definitely after taking the buy sell liquidity, price would be hungry for the sell liquidity. So there was this sell liquidity which the price could have taken, and it could have continued pushing up without taking my stop loss. But the actual market structure was bearish and the supply gained control. That's why price not only took my stops at break even, but also invalidated this PY and then it pushed down like this one today. Yeah, actually my stops were taken mainly because the market dynamics has changed. That's all. So yeah, that's it from EU. So uh, that's how I got less. So let's jump into GU and see what GU got for me on this day. So, so the swing structure in the GU in the daily is bullish. The swing structure is bullish. Internal is bullish. So this is the current internal range that I'm dealing with. The price has, price took the Pfizer liquidity and started to rally down. And after tapping into the daily demand, the supply is getting weakened. And again, this could be either the sign of a reversal or there is a slight price in the pause action before continuing the bearish momentum down. So anyway, anything could happen. So I must be prepared for both. But if you ask me what is the high time frame objective, I would say neutral because of the bearish order, not bearish order flow, it's because of the bearish momentum and the daily demand mitigation and the weakening of the demand, weakening of the supply. So jumping into the 4-hour chart, the same. The price is in the 4-hour demand, and the price started to little bit consolidate, but still the price is continuing its bearish order flow. If I zoom in, it would be much more clear. So what happened here? The price is actually consolidating between this uh, high and low of this news candle. So it is a range consolidating between these two. So here you can see that the supply chain is being respected and this low failed to take out this high. This low is weak and the price can target this low as well as the weak internal low. So let's jump into H1 and here you can see that the swing structure is bearish and internal is also bearish. Zooming in, this is H1 chart. Uh, if I take this internal structure alone and zoom it, you will get something like this. This is the current internal structure that I'm dealing with. So here you can see this is a strong internal high, it's a weak internal low, and there is a ton of sell side liquidity here, which is low resistance for the price to come. And also this is my first target because this low actually fails to take out this high, which means this low becomes weak, and we can expect some pullback or a bullish, a bearish peak zone to be formed, and then the price can take out this 4 hour sell side liquidity, and eventually this low resistance liquidity. So that's what the game plan is. And the price was approaching the H1 POI. I just started to mark the uh, my confluences and it's actually phase A2. And these are the conditions. These are the conditions for the phase A2. And if all of them satisfy, which means that it's a high probability trade. And if some of them, if three or two of them satisfy, then it's a medium probability trade. So first condition is that price was reacting out from high time frame POI. actually price is still in the 4 hour demand. So I can't say this box can be ticked. So this is unticked. So it is in line with the medium time frame order flow. Medium time frame has chopped bearish recently. So I'm trading bearish, which is I'm taking shorts, which is in line with the medium time frame order flow. And medium time frame POI, the 404 by F, and yeah, it has it did not see liquidity, but it has displacement. It has made a shift in the order flow. It is unmitigated, and it has flipped this order flow. So four of the criteria is being met. And high time frame supporting medium time frame area, yes, because 4 hour is bearish because of failed the low and clear ground liquidity. So this is a high probability trade, and this has a lot of chance to be played out. So what is the entry method? There is no entry method other than ELC2A or M15 confirmation entry. So for confirmation entry, in the sense, I need to see a M15 bearish chop, then I can use C1.8 to take the shots from that level. That's actually at 8:57 GMT. Price invalidated this PY and took the buy sell liquidity home. So the short idea got invalidated. But I can switch my gears and can look to play shorts. We can look to play longs because there was a bullish top in the 4 hour chart. So and in the H1 chart, the price actually made a small IVOS. So this is the POI that made the small IVOS with a sweep of sales and liquidity. This would be a hyperliquidity POI which can hold and push the price up. So this is actually phase D without bullish IVOS. So what are the conditions for phase D? Price tapping into the high time frame POI. Yes, it's tapping. And high time frame supporting the medium time frame area. Yeah, kind of because 4 hour has stopped bullish as bullish and low resistance liquidity in the buy side. Where is that low resistance liquidity? Here you go. There's a lot of low resistance liquidity that can be targeted, and there is no supply from which the price can react. The price can just rally through. So it's a high probability long chance for me to take some profit. So what are the risk factors? Only one risk factor that it is counter internal. So what are the other consequences? It has left the Asian low. It does not have any opposing supply and demand zone. It has some time-based liquidity to target, that is equal highs, London lows, mean London highs, New York high, USD high, and it has low resistance liquidity to target, and it has a positive SMT with the XY. So all these factors say that it is a very high probability trade. For me, I would just take this trade politely, and I would be happy to lose my capital on these kind of risks. And what is the entry method? Entry method is LC1 for 50 played outs. This is the lost demand, lost unmitigated demand. If the price managed to come down and tap into this demand, I would definitely take LC1 and boom, I would hope a lot for the price to move up. But unfortunately, that LC1 did not happen and the price kept its bullish momentum intact, but it started to consolidate in the New York session. It now came down to count the leg investment. Thus, there is no entries and there is no trades on the but the conditions were perfect for the trade. The only thing missing was the entry. If it happened, then I would be happily took the trade, and probably it would have gone in my favor. So it is what it is. Just moving on to another day, another session, and a different result. So that's it from this day. So give you a summary. I took one break-even trade on EU, and there was no trades on GU because the lower time frame entry did not pay out. So yeah. See you on October 16th, 2024. Until then, yes, guys. Bye.